Hi, I'm Nathan Birch from B.Invested.com.au. Just thought I'd give you an update on what's been happening and what I've been up to. I know it's been about a week since anyone's heard from me. I've been on holidays with the girlfriend up at Port Macquarie in New South Wales North Coast, and I just came back from jet boat riding, or jet ski riding, sorry to be exact. I let the girlfriend go on the front for 7 minutes, and I was driving around the back. And that 7 minutes, I felt like Jessica Watson. It felt like 7 months I was stranded out at sea. As a few of you know, I'm a little bit hyperactive, and I can't sit still for too long. And I needed to have a bit of R&R, so I came away, and I couldn't keep myself away from the computer. I couldn't keep myself away from real estate agents. So in the last week, I've secured a couple of properties, which has been good while I've been away. And I've also just been doing a little bit of, there's been a bit of controversy out there in the marketplace as to whether the growth that we've seen over the last 12 months will continue. And I've been going through some stats and trying to cover off everything that I've been able to get my hands onto. And this is my view, and this is just based on numbers, so it's by no means to take this as gospel advice, but this is what I'm seeing currently in the marketplace. We're in 2010. If we go back 7 to 9 years ago, we'd be looking at 2001 to 2003. And what did we have happening in Sydney's marketplace in 2003? The market took off, so we saw a lot of growth happening there. However, we noticed that there was a lot of developers out there. If you spoke to your accountant, your solicitor, your taxi driver, everyone was a developer, everyone was investing in property. However, there were some negatives out in the marketplace. So if we go right back to 2001, we had the introduction of GST, which was a very negative thing out in the marketplace. GST, no one was aware of in the first place, and it was new and fresh, and people thought it would have all these negative effects. Interest rates were rising from 2001 upwards. Government, the Howard government introduced a new scheme called the First Homeowner Grant, and no one knew what this was in its entirety, but it came in at $12,000, and it was later reduced back to $7,000 as they took off $5,000. There was also September 11 that came into play. So there's quite a few negatives that were out there in the marketplace at the time, and we saw the country's largest and fastest property boom that had come past the shores. And if we fast forward 7, 8, 9 years time to today, we've just seen over the last 12 months, I've got some stats here from RP data. RP data shows that Melbourne has risen by 25.5%, Brisbane's risen by 8.9%, and Sydney's gone up by 12.3%. So that's the eastern seaboard covered. There's other stats there, but I don't want to bore you all day with numbers. Recently, I saw a front page of a newspaper article saying that property prices are going up by $766 a day. If you translate that into what's $766 a day, the average Australian wage is something like $820 a week. So an average house price is going up daily by what the average weekly wage is coming in for normal Australia. So if we look at how this can benefit you, there's still a lot of positive cash flow properties out there in the marketplace, which wasn't seen back in 2001, 2003. There's yields out there in capital cities being Brisbane, Sydney, and other states around the place, which are 7, 8, 9%, 10% yields out there still in today's market. So you might be asking yourself, how can this benefit you? If we look at the marketplace today, there's still ample positive cash flow properties out there and neutral cash flow properties. If you go back to 2001 to 2003, you weren't finding the rents like they are today. Rents have gone up certainly a lot, and some pockets of CBD areas in the national cities, we're seeing purchase prices still at the same level as what they were back in that time. So in essence, you can pick up a property that will cost you nothing to hold. Sometimes it'll cost you a little bit to hold, sometimes it'll give you money back in your pocket. So the question I'd be asking is, if you're getting a property that's going to cost you nothing to hold, below market value and property prices are rising, wouldn't it make sense then to be purchasing? I don't know. I know I'm buying in the current marketplace. I don't know what you're doing in the marketplace at the moment. I've seen over the last 12 months quite a few property investors go from zero to hero, where they've started with a capital level, whether that be a small amount or a big amount. There's always a place out there to be able to find funds from. That have built themselves property portfolios which have given them both equity and cash flow. So being able to generate $50,000 in a property transaction and still be using cash flow is quite a good position to be in. At B.Invested, we're all about helping investors hit their own personal investing goals. So whether that be you're looking at purchasing one property a year, 10 properties a year, generating $50,000 income per year, whatever your goal is, B.Invested is a community which helps investors with the like-minded goals get to their destination by implementing tried and tested strategies that are working in today's marketplace. So getting back to where and why prices will move, where would I expect prices to move, and why would they go up? Australia's, if we look back at the economy in whole, Australia's economy is the envy of the world, and I personally believe that we will be safe from the GFC Part 1, or whether the GFC Part 2 comes in, and that will be based on the fact that we've got a lot of immigration coming to the country. If we look at immigration, it's very important that the country has immigration, high levels of immigration just for taxes. So more people coming in, more people working, more people being taxed, means there's more money coming into the government. If the government didn't bring in new people to the country, it would be political suicide, because there wouldn't be a budget surplus like we've been enjoying. So a lot of people think the budget surplus comes from taxing from the mines or whatever the taxing may be that you think it comes from. Actually, more headcount, strength comes from numbers, and by having more workforce in the country, it means there's more money coming in from the tax and therefore a big budget. If we look at the amount of people that have come to the country over the last 12 months, some stats that I've got here is showing that 443,000 new Australians entered our country in the last 12 months, and that we are in need of 17,400 homes per month to accommodate the new residents to the country. So these are national housing figures, and it's showing that in 5 years' time, by 2014, we'll be short over 300,000 properties. So what's that mean? It's going to be a pent-up of demand for rents, there's going to be a pent-up of demand for prices, and people's lifestyles and living arrangements will change. So as we can see, there's always going to be positives and negatives out in the marketplace, and what you must be asking yourself is now the right time to be buying? I know myself that I'm buying in the marketplace. I know that there's a lot of investors out there that are buying in the marketplace, and the numbers never lie. And if we look at in the past what has been, if we look at the future, I don't have that crystal ball that's going to say this is what's going to happen. Have a prognostication which is looking at what's in front of us and where we'll be heading is the best way of being able to gauge the future. I still believe that there's a strong road ahead for property, and it's a matter of buying those right properties for yourself, whether it be positive cash flow, whether it be capital growth, whatever the structure is and whatever your plan is, the properties that you're acquiring must be right for you. So I'll leave it with you for now. I better get back to my holiday. The question that I'll leave you with is, what's it going to be for you? Is it going to be reasons, or is it going to be results? If you'd like to chat to me more, you can chat to myself or chat to other fellow investors at www.binvested.com.au/forums. I'll chat to you later. Thank you very much for letting me know.